Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. This is February 24th and 25th, 2018 Weekend Market Review, where for those of you who are new to our videos, we take a look at the market from daily, weekly, and monthly perspectives to give us a better sense of where we've been, where we are, and where we're likely headed. Let's take a look at some of the most important sectors today. But before we do so, I wanted to briefly go through what some of the premium members get by becoming Patreon supporters. We have various different spreadsheets we've created that update market indices on a minute-by-minute basis. And so these are some of the sectors right now that are performing best year-to-date: cocoa, Russia, Brazil, social media. So pretty interesting to see actually what's taking place. Emerging markets clearly are in the lead. There's a lot of agriculture names that I'm seeing on the top end of the annual return so far. And when you look towards the bottom, and this list encompasses top 300 ETFs in the marketplace, and at the bottom here, unfortunately for those of us who are bullish on uranium, sugar, natural gas, oil, coffee, some of these names, silver miners, U.S. REITs, gold miners. Obviously gold and silver have done well, but not the miners this year. India's pulled back so far, so some opportunities from a contrarian standpoint are here. And likewise, when you look at the upside, you have a lot of emerging market names that are still doing well, especially Brazil and Russia, which is interesting considering that oil has pulled back some. But let's take a look at the charts that we've got here. Starting as usual with the 10-year Treasury yield. The 28.71 is really 2.87, basically 2.87 on the 10-year, and this is very, very important sector to consider, because as yields go, so do the markets, real estate, commodities, fixed income. So this is perhaps one of the most important sectors to be watching. I mentioned here that we were having some divergence, negative divergence here, momentum going lower as price was going higher. So pullback was definitely not outside the realm of possibility. The question is now how far we go back. Do we pull back to 2.75? Do we pull back to the 50-day moving average? Do we pull back to this breakout point of 2.6? Time will tell. I have a hunch that we're going to probably go as low as 2.5 before this pullback ultimately resolves to the upside and breaks above 3. Here's where we are on the weekly time frame. One of the negative divergences I saw was here we were breaking out above nearly above 3, and yet momentum was lower at 3 than it was when we hit 2.6. So this meant that this particular move likely needed to pull back to the 60 level on the RSI, where there's tremendous amount of support, recoup its energy before breaking higher. And we think we're breaking higher. Why? Because the monthly is absolutely bullish. It's hard to say that this is an inverse head and shoulders, but the MACDs are picking up. Your momentum is leading. It's breaking out here at 2.87. Momentum is bigger, is greater today than when we were at 2.9 back in 2014. So this tells us on a larger term perspective, we are indeed breaking out. And it's just a matter of time when we break out above this. This, in my opinion, will be a fundamental shift in the way investors look at risk assets, bonds, stocks, and real estate. Looking at gold on the daily. On the daily, we closed below the 50, which is not a good sign here. A little bit of weakness, but you want to see this be recaptured very soon. We are trading below the middle Bollinger Band, but above the 50. So some indecision here, and perhaps a little bit of consolidation here. You would have wanted to see this break higher, but we saw negative divergence here. When we hit 1364, momentum was nowhere as high as when we hit 1365 last time around. So this pullback is not a surprise. The question is how deep. By the looks of the MACDs, it doesn't look like it's going to go too deep, and we're ultimately going to break higher. Stay tuned. Gold on the weekly. It looks like it wants to test that 50 level on the RSI before moving higher. It's still above the 50 and the 200-week moving averages, as well as the middle Bollinger Band around 1300. So a lot of support here for bulls in gold. This looks like it's just only a little dip in the beginning of a major term bull move, and this is why breaking out here above the long-term downtrend since 2011. We've broken above that. Now we're just struggling to break above that 1370 to 1400 area. But once that breaks, look out above. High yield daily, well, they bounce very strongly and really found support here on the 200-day moving average, and they look like they want to break out higher. So the question is, how much higher? Likely we're going to test the 50-day moving average here this week, and if we break above 1336.4, likely headed back to 38, and we'll see, is there going to be positive divergence or negative divergence. That'll give us a better sense of whether this move is a snapback rally or it's indeed something for real. On the weekly chart still looks very weak, and so long as it's below that middle Bollinger Band, my suspicion is that we'll break lower eventually, but I am not. This is not a high conviction view. High yield monthly, so far so good in terms of bouncing above that middle Bollinger Band, but we have broken below the 69 to 70 level on RSI. If this can't break back above that 70 level, it's very possible we're going to have a multi-month pullback in high yield bonds. Oil, so far we really bounced back, and it's been not a surprise bounce back because this level is major support here. This is where we took off from 58 all the way to 66. But here's what you want to look at. The last breakdown was right over here, and this is kind of where we broke below the middle Bollinger Band. That was at this level, that 60 level on RSI, served as a resistance here, and once that, support here, and once this broke this level, that's when we really fell hard. So this is the level we're now approaching. What's going to happen here is, are we going to break out, and that's your sign to go long, or are we going to turn back lower, which is my hunch at this point. We'll see. Taking a look at the oil weekly chart, so far so good. We kind of bounced towards that 50 level, and now we're moving back, but again, we're approaching that level 60, I'd say 65. That's kind of the level we broke down from last time around. So what's going to happen here? Is this going to just fake out, break down, or genuine breakout here taking place? By the looks of the MACDs, I think this is going to turn lower. We'll see. Crude oil monthly here. On the monthly level, this looks very bullish, and we might have a multi-month correction, like I said, kind of a cup and handle here, all the way down possibly to as low as 50. But at the end of the day, this index looks like it wants to move higher towards 70s or 80s in the not too distant future. NASDAQ monthly daily looks very good right now. It really pulled back, found support at the 200-day moving average, kind of got rid of its huge overbought reading here, and now it wants to break above that 60 level, which is kind of the point where we broke down. Do we break out above it, or do we go lower? Based on this last hammer candle on Friday, it looks like it might want to run to the upside. On the weekly chart, we might yet make new highs in NASDAQ before pulling back. I want to see what happens when RSI hits this level of resistance, which is that 69 level, which is kind of where we broke down from. But until then, it looks like it wants to move higher. So NASDAQ still looking pretty good, and on a monthly, still exceptionally bullish. And until it breaks below that 70 level, I would not want to go short whatsoever. Russell looks good too. It's breaking out above 50 here. Looks like momentum is leading price, and we might find some serious resistance at this RSI level, which is that breakdown point right over here, but until then, there's still some additional upside. It looks like to be had, perhaps to the 1560 level on the Russell. Russell weekly, again, this level, the 60 level, is crucial to watch. That's where we broke down from. Can we break out to the upside, or are we going to roll over there? And that's going to determine whether this bounce is just a bounce or a renewed move to the upside. Still very overbought on the Russell monthly. S&P also looks good. It looks like it wants to run higher, at least until this 60 level on RSI. So I would say my probability is that this week still, at least in the beginning, will be a bullish one. On the monthly, it looks like it might actually have begun a correction, larger correction. The 60 level now Let's see what happens. Can it recapture that before month end, or are we going to start rolling back over? It's going to be very interesting to see what happens there. A couple more. Oh, that was the weekly, rather. This is the monthly. Monthly still very, very bullish. So nothing to be concerned about quite yet. U.S. dollar index looks like it wants to move higher, like I said, to test this 92 level and kind of see what type of resistance is going to be encountered there. But when you look at the weekly, this is what we've drawn out several weeks now. This is a very, very important level. If it can break this level, then our bearish view is now broken. But if we can't break it, it confirms that we might yet want to move lower, possibly test that 80 level to the downside. Here's what we look like on the monthly level. So far, we've found some support at the lower Bollinger Band, but now we're facing the 200-month resistance. And let's see what happens here. And volatility is breaking down. It's being shorted. This came as no surprise to us. Once we broke out here, we didn't know how high we'd go, but at some point we figured we'd pull back and probably retest that breakout zone. So that's kind of what's happening now. You want to see this hit maybe this particular trend line. If you draw it out here from the upside, this is a 200 weekly moving average curling up now. That'll serve as fairly strong support, at which point I think that there's going to be some resumption of volatility in the markets. This is where we are in the monthly. We need to hold this particular level if you want the bearish narrative to hold strong. MSWORLD Weekly had a massive pullback here, and so far we've bounced, but we'll see what happens. Likely this gap around the 2100 level is going to be filled, but probably begins heading lower thereafter, in our humble opinion. And looking at the monthly, this has been doing nothing but going up over the last 2 years, and it's finally starting to show some cracks with the MACD starting to curl lower, the stochastics. In our opinion, this is just the beginning of a multi-month pullback, but still within the midst of a bull market, which we firmly believe is still in place. Guys, if you haven't already done so, wanted to just briefly mention, whoops, not that. Well, I guess we're going through all the past videos, but if you haven't already done so, please check out our webpage at Moniology.com and on Patreon/Moniology, and please pledge your support. $1, $5, $10, $25, $50, $100, any little bit will help, and we will hit our goals and make awesome content for you guys sooner rather than later. Thanks, guys, and have a great week.